In today's Property Insider Chat, Dr. Andrew Wilson gives the latest breakdown of the rental markets around Australia, and there's no good news for tenants with vacancies falling and rents rising in most capital cities. We also have a chat about what Trump's tariffs are going to do to interest rates and how that may affect our housing markets. And Andrew has a very good analogy about how the media is responding to uncertainties, a bit like it did at the beginning of COVID. Anyway, we're not downplaying COVID, but there's lots of interesting information. Before we get onto that, if you don't currently subscribe to this YouTube channel and you want to keep up to date with what's happening in our housing markets and the economy, please subscribe. So let's get on with the discussion with Dr. Andrew Wilson. Australian housing markets continue to defy the doomsayers. According to the latest My Housing Market reports, national house prices rose 1% in March, building on modest gains in February. But what's happened to our rental markets? That's what I want to find out today as Dr. Andrew Wilson, Chief Economist of My Housing Market, discusses their rental report. Hi, Andrew.
Yeah, good day, Michael. And it's looking like another strong year. Well, so far anyway, for our housing markets. We're seeing a rebound in house prices and unit prices, particularly in Sydney. And, hello, here comes Melbourne. Some growth in Melbourne. And without getting too far ahead, our early data for the month is showing that continuing. And, we'll look at the latest auction results today, and they sort of have reinforced the fact that markets are up and running. We're not talking a boom here, but we're certainly talking, strengthening markets, and that's translating into higher prices. And also in the rental market, we've had a period, Michael, over the past maybe 12 months where we've seen some easing in what's been a terrible period, particularly for tenants in the rental market, with skyrocketing rents and record low vacancy rates. That appeared to be moderating last year. We certainly saw the stabilisation of rental growth, and we also saw vacancy rates starting to rise. Now, whether that was just affordability pressures on the rental market, or it was perhaps a reaction to the changes to the intake for migrants that the federal government has announced, with fewer students now coming in. But whatever it was, Michael, it hasn't lasted that long, because the last couple of months we're starting to see rental markets tighten again. Now, of course, we have rental markets typically ease through the holiday periods, December through to February. But so we always expected some sort of an easing in the markets there because there's less demand. But once the business year starts and the school year starts, university year starts, we do get more demand coming into the rental markets. And we've really seen that over the last 2 months. And that's been reinforced with our latest data over March, which is now seeing a real trend in tightening for rental markets. And vacancy rates are now looking to go back to their record lows, Michael. It's quite remarkable. And although we're not seeing rental growth yet, of course, that takes some time. And we do have affordability barriers that are continuing to constrain rental growth, even though there is certainly strong demand and fewer properties out there for tenants to choose from. And there's no doubt that rental markets have tightened, and our latest data is reinforcing that trend following the holiday period.
Well, let's have a look at houses first and then apartments. What's happening around Australia, Andrew?
Well, it was, in terms of houses, Sydney rents were down marginally by 0.3%, but most of the other capitals were either steady or higher. Adelaide was up 1.2%, Hobart up 3.5%. The yearly growth in house rents is still quite solid. Melbourne's the underperformer there. House rents in Melbourne have fallen by 1.7% over the year. The top performers, Darwin and Hobart, tend to be volatile, smaller markets, but the Darwin rental market has certainly shown some signs of revival, as its housing market has in terms of year. But look, that was due. Michael, Darwin's been an underperformer for quite some time, but certainly looking better now for both prices and rents. Perth up 5.3% in house rents, Adelaide up 5% over the year, Sydney up 3.2%, 2.2% Sydney, and Brisbane up 3.2%. So solid returns there mostly, but it's the vacancy rates that would be of a concern to tenants, Michael. Vacancy rate trends were again either lower for most or steady over the month. The only higher vacancy rate recorded was Adelaide, but vacancy rates, regardless of those movements, are still very, very low, Michael. The highest vacancy rate for houses that we have is in Canberra, which is falling. Those vacancy rates are falling in Canberra at 1.9%. The rest are either at 1% or lower than 1%, with the exception of Melbourne at 1.4 and Sydney at 1.3. These are very low vacancy rates, Michael, pushing again towards those record lows that we had a year or so ago. And it does mean that there's strong competition for property and very few properties out there available. And of course, this is fertile ground in terms of the prospect for higher rents going forward, Michael. And
Yes.
as I said, I think that with tight vacancy rates, the only thing that will stop rents rising again will be affordability barriers. In other words, people just can't afford to keep paying higher rents, even though they'll secure properties. But eventually, of course, with incomes rising, you'll find that rents will start to rise as a result of these, again, low vacancy rates. But the trend is downwards. Again, we expect that as we shift out of that holiday period, end of year, beginning of year holiday period, but not good news for tenants for houses, Michael.
Well, if one wonders where all the tenants coming from, there's people leaving home, there's people divorcing, separating, but we've got all the migrants who for the first 3 or 4 years rent because they've got to find their feet, they've got to understand where their communities are, where the jobs are. In my mind, that's also going to be fertile ground for our housing markets moving forward, as we know 3, 4, sometimes even up to 5 years after coming to Australia, they then want to buy a home. That's part of the reason they come to Australia with the aspiration of owning real estate. All those trends are still positive in the medium to long term for our housing markets, Andrew.
Yes, Michael, and of course, a big driver, particularly of the unit rental market, are students. We saw a sharp reduction in our international student intake through new government policies, and I think perhaps that had some effect on particularly the unit rental market last year. But we are starting to see a similar trend in unit rents in terms of tightening vacancy rates. Vacancy rates are marginally higher for units than they are for houses. But nonetheless, when we look at the vacancy rates, we only have Melbourne and again Canberra at the top level, and they're at 2%. And we understand that notionally 2% is around about the midpoint in terms of higher or lower rents, Michael. But the rest are below 2% and mostly very close to 1 or below 1%. So these vacancy rates at around about 1% or below 1% certainly reflect a shortage of property and certainly reflect what would be upward pressure on rents going forward. But just a quick look at some of the capital's performance. Sydney rents up by 1.4% over the month, steady over the year. Melbourne, these are unit rents, were steady over the month, up by 1.7% over the year. Brisbane East a little bit down by 1.2% over the month for unit rents. And steady over the year. Adelaide and Perth have been the big movers over the past year for unit rents, up by 10.5% Adelaide, up by 8.8% in Perth. And again, just focusing on Darwin, Michael, Darwin unit rents have been are up by 9.1% over the past year, up by 5.7% over the month. But look, there's some seasonal factors there with Darwin that are exacerbated by the wet and the dry season impacting demand. But certainly some more positive signs for Darwin going forward. But no real relief there for units compared to houses, Michael. It's tightening the unit rental market, and we would likely see rents starting to rise as a consequence of that. There's been a big shift in the vacancy rate in Melbourne, Michael, over the month, even though it's at 2% and amongst the highest vacancy rate of the capitals, it's moving sharply downwards. So interesting to keep an eye on what happens with that, with the Melbourne vacancy rate for units. But no good news there for units and the prospect of higher rents going forward if these trends continue. No doubt about that.
Okay, let's look at the elephant in the room, the Trump tariffs, the election coming up, and interest rates. Now, you've been very correct in your predictions of interest rates recently, but since the tariffs came out last week, the money markets, and we know they've got a vested interest in like arbitraging interest rates,
Yes.
but the money markets have actually suggested that there's a 90% chance of an RBA rate cut in May. That's gone up from 70%. And they're suggesting that interest rates could fall another two times, maybe in August and in November again later on this year, because of economic downturns overseas, maybe heading their way to Australia as well. What are your thoughts on that, Andrew?
Well, interesting times, Michael, that's for sure. And if we look at the money markets predictions, let's go back a year. I mean, the outcomes of their predictions a year ago were laughable, as they mostly are. But of course, as you so rightly suggest, they're not about accuracy. They're about getting the market to make take positions, because, they make money from people buying or selling according to what the outcome for interest rates will be, or the currency, etc. But look, we are in interesting times, Michael. So who knows what the future holds? I think we're sort of now running another hysterical media scare campaign. It's a bit like COVID all over again. Just in terms of and I'm not downgrading the seriousness of COVID, but just in terms of the, raft of headlines predicting doom and gloom, we're less than 1 week into the tariff scenario. We'd have to have a lot of water go under the bridge before we got to the point where there were serious concerns about the Australian economy, and that we actually had some signs some real signs in terms of economic performance, that the tariff environment was impacting the economy to the point where we'd need to stimulate it. It actually, if this did occur, and I'm not saying it will, it would be interesting to suggest, well, maybe we've got rid of one interest rate cut that we should have held, in terms if we did need to stimulate the economy down the track. And this is something that you and I have discussed, that it was a bit of a surprise, well, certainly questionable on some of the macroeconomic circumstances, that the Reserve Bank did cut interest rates in February. And, maybe it just reduced the capacity of monetary policy to stimulate the economy if we needed it. And since then, of course, we now have these issues over tariff. Now, I'm not sure the actual nature of tariffs will create the downturn that many are predicting, but we can talk ourselves into it, Michael, make no doubt about it. If we become sufficiently concerned, particularly given all the scary headlines out there, that we stop buying, we stop selling, we stop being engaged in the economy, then of course that can cause a downturn in its own right. So hopefully we won't talk ourselves into the position where we will need to cut interest rates, as the money market is suggesting. Our interest rates are now below the US interest rates. We're at, of course, 4.1%. And the US are at 4.3%. The US has had some very strong results in terms of its recent data, economic data. It had a surge in jobs over March, which has certainly put back any thoughts of an interest rate cut there. But of course, they're still, as the money markets here, are concerned that, of the prospect of an economic downturn as a result of these new tariff policies. And therefore, the outlook becomes extremely cloudy, as I guess it is here, Michael. Although we are not as exposed to particularly the US tariff environment as others are. We actually have a trade surplus with the US, and so it's interesting that we were targeted in a way, because we're one of the trading partners that actually buys more than we sell to the US, so, which is different to some of the other targets for the tariff environment. And that's what Trump's all about. He's trying to rebalance that. And of course, America is the biggest consumer in the world. So they're a very, very big market for international exporters. And because of that, they have a lot of leverage in terms of particularly trade policy. And I think this is what Trump's trying to take advantage of, to reduce the deficit that the US has with other trading partners, such as the European Union, Canada, and China, by shaking them up with tariffs. So interesting to see what the outcome is. But certainly, Michael, we must emphasise that sentiment is the key at the moment, and these headlines aren't going to do anything to sort of maintain a positive sentiment about economic prospects.
Well, if the money market's suggesting a total of 1% interest rate fall this year, they'd be thinking that our economy would really be starting to tank.
Yeah.
But we're still creating jobs. I can't see the tariffs affecting Australia's service-based economy. We may sell a bit of beef to America. Somebody else is going to want that. So it's unlikely that we're going to suffer as much as many other countries. Sure, if some of our trading partners suffer economically,
Yeah.
that may affect us. But you made a good analogy with COVID, and we've got to remember what happened to our housing markets in COVID. And when interest rates fell because of the downturn during COVID, they were very, very strong. After an initial period of concern and uncertainty, we just got on with our lives.
Yeah, the only thing that halted the housing market during COVID was the lockdowns, because you actually couldn't go out and, particularly in Melbourne, you couldn't go out and do anything. But you couldn't go out and buy, or sell a property. Once those lockdown restrictions were eased and finished, the markets took off. And look, Michael, absolutely no doubt that interest rate cuts, if they came, would be a positive for the housing market. Obviously there's a sentiment issue there which would perhaps offset it. But as we've seen, and as we're seeing now, perhaps just that interest rate cut in February is part of the story behind higher house prices. Imagine if we had a 1% fall, it would certainly make property highly affordable in relative terms. And maybe that would be the key to regenerating any weakness in our economy. But I think we've got a long way to go. As I said, we're less than a week into this scenario. Sentiment will be the key, and we just understand that there are agendas here, particularly in the media, that are looking for, people to be clicking to find out what's going on. And it's all this uncertainty that fuels fear. And as I said, we can talk ourselves into a reduced economic performance if we sort of take hold of it. But we shouldn't take what we're reading and what we're seeing as being in any way, reliable as, we would hope it to be, particularly in terms of the economic outlook, because we know there are other agendas here, Michael.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, watch this space, because as you say, we're only a week into it, and then there's the overlay of the election as well.
Yes.
But it didn't seem to stop people going out on the weekend and buying properties at auction, Andrew.
No, we had an interesting weekend, Michael, for auction activity. Another, generally steady results for clearance rates, but we did get a drop in the number of auctions conducted. Now, we have to understand that next week, of course, is the week before Easter, the Easter break. So we will see large numbers of properties going under the hammer next week. And that's what typically happens because of the lengthy Easter break. And of course, the following week is Anzac Day holiday period. So agents and vendors avoid the clash with the holiday periods, the big holiday periods. In fact, that pre-Anzac period, Michael, is typically the biggest period of the year for auction activity. So no surprise that listing numbers were down a little bit, because I think we're going to see, or I'm certain we're going to see, big numbers coming up this week and this weekend in our auction markets. But so that'll be a real test for auction activity when we do get high numbers of auctions, whether the clearance rates, which have been pretty reasonable, particularly Sydney and Melbourne this year so far. And again, it's it's pointed to higher prices, and that's what's happened, because we've seen clearance rates in Sydney and Melbourne tracking higher than where they were at the end of last year, and also around about, and in Melbourne's case, higher than where they were at the same time last year. So big test coming up. But let's have a look at what happened last weekend in terms of auction results. Sydney auctions down just under 1,000 auctions, which was down reasonably from the week before. Clearance rate just about the same, 71.7%, and very similar to the same weekend last year, or the same week last year, Michael. Same week last year was the week after Easter. Easter fell earlier last year than this year, but auction clearance rates are around about the same in Sydney as where they were a year ago. Melbourne had a big falling away of auctions, still, big number over the week, 1,191. Clearance rate was actually higher in Melbourne. Melbourne's clearance rates are just starting to push towards that 70% mark, Michael, which would certainly be a revelation in terms of the prospects for the Melbourne market. Higher than the week before, the clearance rate, and reasonably higher than where it was at the same period last year, Michael. So as I said, we've seen some good signs, early signs coming out of that Melbourne market, not just in house price growth, but also in what's happening in the auction markets. Brisbane listings again down a little bit. Also, the clearance rate was down in Brisbane. It's been tracking around about the 40% mark for most of this year, which is well below where it was a year ago. As we say every week, Brisbane has a different auction culture. So we can still see prices growth in the Brisbane market, regardless of lower auction clearance rates, particularly compared to Sydney. Adelaide keeps on keeping on, 70% clearance rate, similar to the week before. Auction numbers similar also, but no doubt not as strong as it was a year ago, but still producing good results there for sellers in Adelaide, Michael, and certainly generating prices growth. Same old in Canberra. It's been hovering around that 55 to 60% clearance rate mark for most of this year, a little better than last year, but not breaking out to the point where we'd suggest that there'd be prices growth in that Canberra market. So when we do look at the trends, the annual trends, we can see in Sydney, certainly had a good start to the year. Sydney clearance rates tracking higher than where they finished the year and around about where they were over the same period last year. Melbourne certainly has built ahead of steam in relative sense. Nothing to get too excited about just at the moment, but good solid clearance rates, well above where they finished last year, and also now consistently above where they were at the same time last year, but still some work to do in that Melbourne market, and looking forward to the prospect perhaps of a higher than 70% result there in Melbourne over one particular week, but next week we'll really test the Melbourne market with big numbers of auctions. Brisbane's fallen away this year so far and compared to last year, but still producing prices growth in that very individual Brisbane housing market. Adelaide down on where it was a year ago, which was that boom time period in the Adelaide market, but still nonetheless producing prices growth. The question is, will Canberra finally move above 60% consistently? It's sort of teasing it just under that at the moment. Clearance rates aren't really at the stage yet where we would suggest prices growth emerging in Canberra. If you're looking for the latest auction clearance rates, you can get the Capital City Snapshot every Saturday at around about 6 o'clock on my LinkedIn channel, which is Doc Andrew Wilson at LinkedIn, and Michael Public publishes the full national report on his sites on Sundays, and that includes the regional breakdowns for Sydney and Melbourne and the top 10 sales under the hammer for the week. So another interesting week, Michael, in the property market. We will follow it up next week. We've got some more.
Well, there'll be some interesting things happening with an election, with the Trump tariffs, and let's see how all that plays out. So I look forward to catching up with you next week, Andrew.
Thanks, Michael.